It's time now for the Gem Young Wealthcast. Brought to you by Gem Young Insurance and Wealth Advisors, a family-owned independent insurance and financial planning agency since 1947. Now, from their studio on Star Center Drive in Canfield, Ohio, here's the host of your program, Leo Daprile.
Welcome to the Gem Young Wealthcast. This is Leo Daprile. Well, today kicks off our insurance month, but we're going to take a different angle to insurance than we have in the past. We're going to talk more about where the rubber meets the road. We're going to get into what really happens in the insurance business, both in terms of competition, pricing, the advertising that affects the way you're currently buying insurance. And we're going to focus in on what really happens during claim time and how much that has changed. Because at the end of the day, with all the price pressures going on in the insurance industry, insurance companies are finding many different ways to cut costs. Later in this month, we're going to get into actual pricing of products so that you know and understand. You've heard me say this if you're a regular listener for years, that these are insurance contracts. The insurance industry pretties it up by calling them policies, but they're contracts. The contracts have changed dramatically. What's covered, what's not covered, what's partially covered. And again, that's going to be in a later show. But we wanted to kick it off by saying, let's really talk about what happens at a claim. Because at the end of the day, when you're buying your auto and your home insurance or your business insurance, you have an expectation of how that claim is going to be processed. You, in many cases, and this is one of the pet peeves of what's driving me crazy today, is everybody's believing all insurance contracts are the same. That's one of the reasons we're going to attack it this month. The other reason is the other place they're attacking cost-saving measures is claim time, what they're covering, what they're not covering. So I have with me today my Cracker Jack team. I have with me Kim Cheshire. She's my Director of Operations. I have, who's this over here? We have Becky Olsavsky. She's in charge of all of our service team along with Kim, and I have Denny White, my Chief Revenue Officer. Hey, guys, how are you? Good, and thanks for letting me punish y'all today.
Typical day.
Yeah, typical day. Thank you. That's a compliment, Denny. So we're going to make this fun because claims can be kind of dry and kind of boring, but we really want to get into it because, again, once that accident happens, one of the things I've always said in the financial planning business that if you don't plan right, if you don't do the right things, once the dominoes fall, they fall, and you can't do a darn thing about it. And you have to live with whatever decision you made or what decision you chose not to make. An auto policy or a home policy or your business insurance is no different. So I want you to pay attention if you're listening to this show about what really happens behind the scene on claim times. And we have some companies that are really great at claims, and we have some that say stay out of it, right? And those are our more cost-conscious carriers. So when people want price, you know, we're also warning them about an outcome during a claim. Fair to say?
Mm-hmm. Yeah. I think if you're looking for a way to relate this to the wealth management business, it would be like these different insurance contracts or policies, depending upon the quality of the company, could be like the same as like picking an investment advisor. It'd be like, oh yeah, I have an investment advisor. It's like saying, oh yeah, I have insurance. But it's like, well, do you have like Leo as your investment advisor, or do you have like some, you know, drug addicted, you know, barely working, who's terrible at his job investment advisor? It's like, if you ask the question, it's the same. It's like, yeah, I have an investment advisor, but like, is he a good one? Or same thing, like, is it a good insurance company too? So.
All right. Thank you for that. So Becky, I'm going to start off with you.
Okay.
Give me an example, and these two have to share a mic, so they're going to lean in and out. Good thing they like each other, right?
Right.
So let's talk about a bad experience first, because everybody wants to know the good stuff. I call it the hunky-dory experiences, right?
Yes.
Let's talk about how claims go wrong that you've seen, and take maybe one of our more restrictive carriers, because the fallacy is, even though we're an independent agency, the fallacy is we're more expensive, right? And we're not. We have companies that compete at every price point if people want it, but it comes with concessions, right? So give me an example of one of those scenarios where people didn't have a favorable outcome because they went with a less expensive product.
So we do have a certain carrier that we are completely cut out of the claims process. And unfortunately, when they want to file that claim, they're used to calling us, the person they know, who knows their drivers, their cars, their situations. So when they go to call us to submit the claim, we can't help them there. And then from there, once the claim is submitted, we're hands off. So then when they're having a hard time getting a hold of their claims adjuster, or they keep playing phone tag, or maybe they're not even liking what they're getting informational wise about how the claim is being handled, we're not able to kind of be the mediator in the middle to help them understand or even facilitate a good experience for them.
So let me add a couple of things to that. This is an A-rated carrier, so they fit our requirements.
Yes.
Okay.
Yes.
They're a national carrier, which some people want. Okay. And we warn people when we're placing their business with this company that if it's a claim, we can't help them. But some people are so hyper price sensitive, they don't realize it. And they don't realize how much more work they have to put in, right?
Yeah.
If there is a claim.
Yeah.
And we just honestly have to sit there and shrug our shoulders with it, right? So we're finding, what I'm finding over the last couple of years, and Denny and Kim, I'll let either one of you guys jump in on this. I'm finding with a lot of these carriers, they're really driving their app and they're selling it to people on the convenience, but they're using the app for them to file and adjust their claims. So this isn't, as it appears to be, just a convenience factor for the client. This is them just driving down their internal costs of trying to process a claim.
I mean, insurance companies are in business to make money, so they're looking at the bottom line. I think as over the last 20 some years that I've been doing this, you can see where insurance companies have cut some costs, and rightfully so. I mean, the days of needing maybe like an in-person auto adjuster, those days may have gone by the wayside. What modern day insurance companies do is they partner with a body shop or several body shops in an area and will rely on that body shop to write the estimate. And they're going to write the estimate anyway, even if they had an actual auto adjuster from the insurance company, and then they're just going to agree upon the estimate. So they've kind of eliminated the claims adjuster from the company to adjust that loss and put it on the body shop so that they have less employees to employ, and the work's getting done, and life goes on. And really, like, if a insurance company's humming, then they can even maybe give a little rate decrease because they have less internal costs on the books. You know what I mean? So
Right. So Kim, I'll ask you this question. One of the things that's always been an issue is if there is an auto loss, right? The parts that get used to fix the car, right? Are they OEM parts, original equipment manufactured parts? Are they aftermarket parts? There's some of our companies that will do OEM parts and others won't, right?
Yeah, there's a few that will just put the cheapest parts in there just to get you on your way.
Do you, Kim, does that matter to people?
It does.
Okay.
Have an expensive car, you want good parts on there.
Right.
part of the
Yeah.
crux of
It's gonna
this, it's like the insurance company's contract is to put you in a pre-loss condition. So if they put brand new parts on everything or give you brand new everything, then you come out better than you were before, which is not how the whole like purpose of insurance works. So these aftermarket parts go through pretty stringent guidelines as far as being appropriate for a repair. I think preferably I would prefer original equipment parts if it was up to me. So I may pay for that optional endorsement just to make sure.
Okay, so talk some more about that, Denny, being an optional endorsement, because there's some of our companies where that's their standard contract, right? And others, again, this all gets back to the competitive landscape and people because one of the things everybody does, and we know it because insurance is complicated, we already know nobody reads their policies, right? And then when they have a claim, that's where the surprise comes in because the adjuster doesn't know you from Adam, and they're just going to interpret the policy as it is. And it's not that it's bad. It's people not knowing what they have.
We'll probably go down a pretty deep rabbit hole if I expound on this original equipment parts scenario. every company that I know that we deal with, that is an optional endorsement, OEM parts. There may be a scenario where, like, let's say you buy a brand new car, 2026, whatever, Chevette, and you smash up your 2026.
I'm old enough to remember that car, Denny.
You smash up your 2026 Chevette. They may not have aftermarket parts available yet. So it's a possibility that you could get OEM parts on your 2026 Chevette without paying for the optional endorsement because they're not available in the aftermarket yet. So
Okay. Yeah, well,
it's a complicated scenario. And then you can only get those original equipment parts on a car that is within so many years old too. They're not going to pay for OEM parts on my 1989 Mustang, you know.
right, sure.
So.
So, but this all gets back to, this is all technical knowledge that the average person might, the point of wanting to have this conversation, and Becky, is when people come into a claim, they come in with a set of assumptions, right?
Oh, absolutely. A lot of times people assume the coverages they have, and then once they're going through the claim, and unfortunately they talk to the claims adjuster or talk to us, that's when they come to realize, I don't have OEM, I don't have rental reimbursement. You know, those things that actually do matter, you know, that were extra costs that were decided against.
And I think part of our challenge is when people are comparison shopping, they're looking at their declaration page, which has the standard liability numbers and so forth and all of that. And a lot of times those are I'll call it the coverages for the severe but infrequent claims, right? So that's sort of what people look at, and they look at that and say, oh gosh, if I kill somebody, then I have enough liability coverage, I'm okay. But they don't talk about frequency claims.
Like deep in the pages of the policy jacket. Yeah, that's what you're talking about.
Exactly.
And you know, too, I think we see this more often on property claims, whether it be like homeowners claims or commercial property claims, where something happens to somebody's house, whatever it might be, and they automatically assume that because I have this property coverage, that this thing is going to be covered, where they're deep in the policy jacket of a property policy, there's a whole bunch of exclusions of what they won't pay. So like when you look at the deck pages or declaration pages, it's got the catastrophic numbers and the insured value amounts and things, but deep in those policies, it shows what they will pay and what they won't pay. So
Becky, back to you. So when you have that scenario where coverage did not meet expectations, how do you navigate that for somebody?
Well, the majority of the time, once we discuss, you know, what they were assuming they had is actually what they did not have. From there, you know, we try to explain to them how it would have benefited in this instance. From there, we obviously recommend, you know, if this is something very important to you, we can get this added on as an endorsement for the next claim, the next time you run into the situation where you're out of vehicle and you're missing that rental.
Okay, so Kim, let me ask you this question, because I know part of our practices is trying to do reviews because people's lives change, right? And we know, you know, we see this a lot in the wealth management business, and we're going to talk about this more in a later episode, where people's limits don't match their net worth, where people kind of get stuck where they were. And people kind of just say, they just renew and renew, their life's changed, maybe they're worth more, maybe there's, especially today with cars, there may have been something, a coverage when they bought their insurance policy from us years ago because it was a less expensive car, and those additional coverages may not meant a lot to them. But now it's a different world. Maybe they're more successful, making more money, driving a nicer car. So there's a lot of additional coverages that they should at least be considering. How much of a challenge is it for people to do reviews? How hard is it for you to get people to do reviews? Because let's be honest, people think when we're calling to do a review, they think we're trying to sell them something.
Right. Well, we try to talk to people at renewal just to see if there's any changes going on. But sometimes they don't understand what kind of changes they've went through that can make a difference in their policy. So we just go through questions, Some people stay with older policies that don't have those endorsements, like rental car or glass coverage. So we have to, let them know, you don't have this, you don't have that, but we can look elsewhere to see if we can get that for you.
So, and this is something I don't think people, and part of the reason I'm bringing this up, so I'll pass the baton back to you for this one, Becky, is people don't understand how much a new windshield costs these days,
Oh, yeah.
right?
Yeah. And what I was just thinking of when she was discussing the renewals is a lot of people think when we ask to have a review, or they are asking for a review, it's equaling to us lowering the premium. When really it's not about lowering the premium, it's making sure you're covered sufficiently for what you have, whether it be the value, you know what I mean, or the coverages that might have changed and nobody thinks to call and tell the company. It's more so we want to make sure you're covered how you should in case something happens, whether it means the cost would go up or down.
The headwind we have is in a world where everybody's being marketed to saying they could save the money on insurance. And it's true to a degree, but at what cost, right? So back to your point where people are buying insurance and they're cost sensitive. I mean, let's be honest, everybody's cost sensitive about their insurance. Me too, right? So I kind of say, let's take that off the table because that's a given for everybody, right? Everybody wants the best value for the dollar. That's just how we're all built and wired, right? But people don't understand it till that claim comes and then they realize what they gave up in many cases for dollars.
Yes.
Yeah.
We're looking to offer professional advice at a fair value. That's the move here.
Right.
So, and to go back to protecting those people's assets, it's like we live in such a litigious society now that the days where 20 years ago when you hit somebody, it was like, oh, are you okay? Are you okay? Yeah, everybody's okay. Now it's like, well, you're getting 20 letters in the mail from every lawyer in town saying, oh, you need to sue this person. Oh, you need to sue this person. So claims are becoming much more expensive than they used to because of the litigation associated with it.
So let me give you some more data on that. The insurance industry now calls that social inflation. So,
oh, yeah, for sure. Yeah.
Right. And in 2025, we had a record number of, I just read this last week, nuclear verdicts. Do you know what that is? Did you ever hear that term?
Hot coffee from McDonald's spilled on me, and it's like I shouldn't have been held accountable because I shouldn't have thought that the coffee was hot.
No.
Type thing.
Nuclear verdict is the size of the verdict.
Oh, I see. So not only unjustified outcomes, but
The large
large
being
payout.
paid out.
I see.
Like the amount of verdicts in excess of $40 million per verdict was higher than it ever has been in 25. Number one. Number two, it's just like all the businesses right now, you hear the term private equity. Private equity has been going into industry after industry and rolling them up, doing it heavily in the insurance industry. Well, private equity's gotten into the law business. So a lot of these, do you ever notice lately there is like ridiculous advertising and all of a sudden there was these small law firms that are gargantuan law firms. They're growing that way because private equity sees the money and the opportunity that's being made in lawsuits and settlements. So they're buying these law firms, they're merging them up, they're advertising them, they're giving them the financial horsepower to go after every possible settlement that they can. That's one of the things that really is become a problem for the insurance industry. These large lawsuits, to your point, Denny,
Right.
to the amount that there are, that everybody's suing everybody for everything, because in the old days you would have said, like you said, everybody's okay. But now with the 20 letters, you're like, well, hey, there's a lot of money.
Am I
you can
okay?
get.
Yeah. It's like,
Right. And it's not your money anyhow, Denny. It's the insurance company's money. So what do I care? Right. We'll still be friends when you're done. So let me just sue the insurance. And I hear people say that. Look, it's not you. It's not your money. But there's an opportunity for some money since you hit me that I can go after that. So we see it all the time. And it's something we get judged on. It's
well,
the
now
amount of
it's
claims.
now more than ever. It's like, make sure that you have the appropriate liability limits on these policies to protect yourself in case of a large loss like this. Anything in excess of your policy limits, you're personally responsible for. So
Do
you're
you
trying to protect your assets. It would be important to you to have high limits on your insurance policies.
And that matters more than ever because years and years ago, we set liability limits of 100, 300 years ago, which seemed high. In today's world, that's not really enough anymore.
Right. Even the state minimum has increased, I don't know, probably 5 years ago from $12,525 to $25,550. So that's doubled. And that's not even close to having enough insurance.
No, but we're seeing that more and more. Have you, come back to you, to Kim and Becky, are you seeing more people interested in increasing their limits, or people just trying to stay where they are because that's where they've been?
Staying where they're at. I don't see too many changing.
No, I don't ever get any asks or requests to increase. In fact, it's probably the opposite. If anything, they want to decrease to save on their premium.
Okay.
The liability limits are really one of the cheapest parts of auto policy or homeowner's policy. To change from like $300,000 to $500,000 on a property policy is probably like $5 a year. I mean, like, so cheap.
Right. But people, and that's, again, I don't want to go too deep into that because we're going to do a whole show on that where people just, they don't perceive what they're worth. You know, they're buying, I was reading last week too in the Wall Street Journal, one of the anxiety for people buying cars is the price of the average car is getting close to $50,000, right? Go back, pre-pandemic, that was in the 30s, you know, so that's what, a 30%, 35% increase in the price of a car.
Yeah.
I'll tell you what though, like me and Becky did have a client that he came in and I offered him like 2 different versions of what he could get, one with the same limits and one with high limits and umbrella. And he took the high limits in the umbrella because nobody had ever offered that to him before.
Well, and that's all that happens as part of a review, right? And understanding what it is.
The guy was concerned. I mean, like, and rightfully so. It's like the perfect scenario, really.
I find that when people don't understand something, they try to make a decision on what they do understand, right?
Right.
So people understand their money.
Yep.
They don't understand insurance policies. So to them, when they see that all these line item coverages on their deck page at company A, B, and C being the same, to Denny's point earlier, without going deep into the policy to see what they gave up, they look at that and assume same. How do you get people, and I'm throwing this to both of you guys, how do you get people to think differently about that?
Have to explain. Give them a situation that you know dealt with before, and then they start understanding.
Do you find most people receptive once you start understanding?
They are.
Okay.
I even go back to, my daughter was in a couple accidents before, and this is what happened. I've been in accidents before. This is what happened. So, you use your personal experience with them, and they understand at that point.
Got it. Okay. Well, this went fast. I got to stop here and take a break. We'll be back. We're talking about what really happens during claim time and what the process really looks like today, especially in the world of the hyper competitiveness of people trying to buy their auto and home and small business policies today. So, okay, I'll be back after this break. This is Leo DePrilli. This is the Gem Young Wealthcast.
At Gem Young Insurance and Wealth Advisors, we make planning for your future simple by offering both insurance and wealth management under one roof. Our team helps protect what matters most while guiding you toward your financial goals, whether it's safeguarding your home, health, business, or planning for a work-optional lifestyle. With everything in one place, you get seamless support, personalized strategies, and peace of mind. Call Gem Young Insurance and Wealth Advisors at 330-533-7941 today to schedule your fit meeting and experience all-in-one protection and planning.
At Gem Young Insurance and Wealth Advisors, we know insurance can feel complicated and overwhelming. That's why our team is here to listen, understand your unique situation, and provide solutions that work for you. From home and auto to life, plus a team dedicated just to commercial insurance, we help protect what matters most without the stress. Don't wait until an issue arises. Call Gem Young Insurance and Wealth Advisors at 330-533-7941 to schedule your fit meeting and get the protection you need today.
At Gem Young Insurance and Wealth Advisors, we believe your financial goals deserve more than just a plan. They deserve a team. From planning for a work-optional lifestyle to managing risk and supporting your everyday needs. Our financial planners, paraplanners, and service team work together to build a strategy that truly fits your life. Planning for the future? We'll help you make that confident financial decisions and achieve lasting peace of mind. Call Gem Young Insurance and Wealth Advisors today, 330-533-6936, to schedule your fit meeting and start building your financial future.
Now, back to the Gem Young Wealthcast, brought to you by Gem Young Insurance and Wealth Advisors. Once again, here's Leo DePrilly.
Welcome back to the Gem Young Wealthcast. This is Leo DePrilly. If you're just joining the show today, we're talking about what really happens at claim time for your auto insurance. This is the beginning of our month on insurance, and we're going to do it different this time. We're going to get into how things really work, what really matters, what's in the mind of insurance companies, what's in your mind, and how are you making decisions. So I have with me my three of my key team members. I have a bunch of, I consider you all key team members, but I got three in here right now. So you three are my favorite today. I have
Always your favorite.
Always. I have Becky, Kim, and Denny. Welcome back, guys.
Hello.
So we talked a lot in the first segment about insurance contracts where they're different these days and people having different expectations at claim time because of the assumption of everything being equal. We talked about the challenge of trying to get folks to do a review without the only expectation being to reduce their premium, because reducing premium means what am I giving up, right?
Yep.
And we're finding, especially we talked a lot about the auto game where cars are more expensive. Especially we went through this cycle for a while during the pandemic where rental reimbursement was months, because there just wasn't any to be had. And even today, rental reimbursement was kind of like an afterthought in terms of cost. It's a big deal these days, to drive somebody else's car for a couple of weeks. We're even seeing body shops that are so booked up, and they can only do so much with the rental reimbursement. I had a friend of mine. His car was wrecked and drivable. It took him 6 weeks before the body shop was able to take him.
Mm-hmm. I've noticed that quite a bit lately. Is the busyness of the body shop and the wait till you can get something in to get repairs done, and it's fine as long as that vehicle's drivable. Cool, because you could drive it until you have to drop it off. But
Right.
Let's say that there's a car that you can drive, and it's like 3 months till they could get the parts together at the body shop and schedule it, then for sure you're running out of rental reimbursement money.
And these are the things, and Kim and Becky, I'll throw this back to you. These are the pain points that frustrate people during claim time. So, it's before you answer that question, let me just add this to it. And I'm famous for asking 14 questions at once. So answer whichever ones you want, whatever order you want, okay? Is when the whole process of a claim starts. We're still front line here, right? We're still old school where we'll take the claim, we'll still connect, we'll get the ball rolling for people. That matters a lot to me because, when you're buying insurance, my dad used to say, all you're selling is a promise, right? Until there's a claim, an accident or whatever, that's when you earn your stripes, right?
Yeah.
And so I've always believed in that, and I think that's a timeless philosophy that should exist today. I don't think you should just be saying, here, go to the app, get things started, they'll call you, right? Because there's pain points along the way. Number one, when that accident happens, even if you're somebody that's seasoned by being in a lot of accidents, which most of us are not, right? But there's a lot of emotion with an accident. You brought up your daughter. She had a lot of emotion with that accident because it's traumatic, right?
Yeah, she was really emotional.
Yeah. And even though you had the logical answers to help guide her through, but that's most people at claim time, right? So that's, to us, a really important time to really help somebody. That's what we're in business for, right?
Yeah, we want to give people great service come claim time. That's like the whole reason we exist, right?
That's right. So, Becky, tell me how the process starts.
So normally customers will call into us, and sometimes it'll be, especially with a home, I might possibly have a claim. They're not even sure. Auto accidents are way more cut and dried. Hey, I hit this car. I ran a red light, So from there, we try to be there for them. This is obviously a difficult time for them, and emotions are really high. So we take as much information as we can, especially if you have like the police report numbers, the location, any other driver's information, and we want to compile all of it into, a claim submission, get it into the carrier, so that way we can get the ball rolling for you, so that way you can, be helped and no longer inconvenienced with whatever's going on.
And Kim, what's key to that is once that process starts, and even within our own agency management system, we're now downloaded a claim number, right?
Yes.
We now have an adjuster. So because in this next section, I think we could probably spend the rest of the show talking about it, is why people get frustrated, right? Right? You guys did a great job putting this together. And this is where the frustration can either be resolved or it amplifies for people during a claim. And so it starts with what you just said, is setting things up. Number one complaint people have during a claim is lack of communication, right?
Right.
And if you're going it alone or with that one company, I wanted to bring that up because I just wanted to drive the point home that cheap has a price, right? So with these people, and we find many times when people go through that claim, they're more willing to look at other insurance carriers that maybe aren't that inexpensive because that experience wasn't as hunky-dory as everybody thought it would be and as easy, right? So that's number one.
I think also, just to chime in on claim time, none of us, myself included, answer the phone to strange numbers. So the insurance company is reaching out to insureds to try to get a statement from them or to find out what happened or to get them a check, and like they don't answer the phone. So it's like, and they don't check their voicemail. So it's like the insurance company's trying to, hey, we want to finish this up. And then sometimes the insured can drag their feet inadvertently because they don't want to answer the phone to a strange number.
So Becky and Kim, we've had a couple of those situations lately where we've had clients called and were frustrated and saying, I haven't heard from the adjuster. Where this is, again, back to the service, you're able to reach out because you know who the adjuster is. You have, and the adjuster says, well, I've called them. They're not calling me back, right? Yeah. So we're getting that with more frequency. So what are people saying when you tell them that?
Well, I didn't recognize the number.
That's
Yeah.
exactly it.
Right.
Well, they're trying to get a hold of you. Here's the number. Here's their name. Give them a call. So we get all the information for them, and they're a little happier.
Right. Because we find the number two reason people switch insurance companies is a poor claims experience.
What's
know
number
that.
one?
Price.
Oh, okay.
Yeah. They don't know. And then that's the case.
Price.
Right? Like I said, we have 8 companies, so we know. We know where the price points need to be, right? So that's where we take that off the table. So we talked about this a little bit at the top of the show about misunderstanding of coverages. And again, people don't ask the question on something specific till there's a claim, right?
Yeah.
Even though our process is when Denny and his team were bringing on new clients, we're going through a fact finder. And sometimes it could feel tedious to go through that fact finder.
Yeah, we're trying to gather as much information as we can on somebody so that we can properly put together some proposals for protecting people's wealth and assets, right? So it's like we might seem like we're asking too many questions or be prying too hard, but it's like I want to find out exactly what is important to you so that we can appropriately protect that and tailor something that's like specifically for what's going on in your life or the risks that you feel most vulnerable about. So that's all of our purpose here.
And we'll never change that because
Yeah, right.
that's just how it is for the company. Because my argument's always been, if you go back to the companies that you move to because you said it was cheaper, my argument's been when you go back and price out what you gave up from them, you didn't save any money.
And we want to make sure that you're number one properly protected, right?
That's right.
We want to make sure that we're hedging all the bets as good as we can. We want to make sure that you know the things that maybe you're willing to take the risk on, and maybe you know that so that you can make an educated decision on what to buy and what not to buy. And then because of the amount of companies that we represent, many times it's more competitive cost wise than what the people were paying before. So
Right. Yeah, that's a good point. When we present all this, it doesn't make us more expensive.
Right.
It just makes us.
and matter of fact, because of those 8 different companies, you can maintain your relationship with me or Nancy or Vince or Jerry, whoever, your entire life, and we can give you different policies when the need comes around.
And that's important too, and that's why we have the companies, because everybody's gone through it. And like post COVID, when inflation exploded, we had some of our, and I say this all the time, strategically, the reason we have the 8 companies that we do, we have national stock companies, national mutual companies, super regional mutuals, more local mutuals, because they're all going to behave differently in different markets, right?
At different times.
Right.
Yeah.
And then when inflation really exploded, the cost of repairing a car or things like that with the home, the stock companies took large, painful, immediate rate increases, which they went from really great companies, really great products, to us going even for our own clients. Holy smokes, right? So we ended up moving a lot of those clients away from those companies because there's a justification for sensible rate increases that keep up with inflation, with carriers that maintain good, solid insurance policies, right?
We want those policies to go along with inflation, simply for the fact of, if we sold you an insurance policy 20 years ago and never increased the coverage amounts like automatically, and something happens 20 years from that date, you're going to be uninsured or underinsured significantly.
Right.
So.
And that was my premise to the limits and what's in the policy. If you really haven't looked at, so this is my advice to anybody listening, no matter who you're with, if you haven't done an honest review of your auto and home and commercial policies based on who you are today, you're doing yourself a great disservice.
Commercial, especially, many agencies don't sell a whole lot of business insurance, and I'd say 6 or 7 out of 10 that come across my desk have the wrong business classification listed in there. So you could be paying a premium for the incorrect business class code at a higher rate than what you need to be.
Yeah, that's always been a problem.
I've
Misconception.
seen that multiple times, yes.
Right.
People dabbling in a line of business they're not really good at.
Right.
Yeah, that's a pain point. So let's talk, Kim and Becky, let's talk expectations versus reality in the claim time. What are you seeing there?
I would say with expectations, a lot of clients, again, they assume everything is covered. They assume a physical adjuster person is going to go out to see their home, to see their car at the body shop. But the reality is, like Denny was mentioning, a lot of that has changed over time. You know, there's a lot of, correspondence between the body shop and the adjuster. A person doesn't need to go out and see every car in an accident. Just like with the home claim, sometimes the person does not need to go out to physically see it. There's going to be obviously circumstances where that just doesn't suffice. I had a claim with a few clients here, where multiple homes were impacted with something. They had to physically go out and see it. But there's a lot of assumptions of the coverages. The reality of it is they're unsure of what their policy covers, and nobody wants to be surprised when they're already going through something traumatic and super stressful.
Right. But again, that's exactly what you two are for. That's what you're helping navigate. So what's your recommendation, you two? Because you guys get the surprise calls. I'm surprised this isn't covered. I'm surprised this didn't go the way it did. What's your recommendations for people to minimize surprises?
Have the coverage.
Yeah.
We try to explain, if they don't have rental coverage, you're going to need that when something happens. You know, we have to explain to them, well, you won't have rental, you won't have glass coverage. So if something happens, you have to pay your deductible for that glass claim.
Yeah, I would say the recommendations that if we're pointing it out to you, it's because it's important. I understand it's optional and it might mean your premium goes up, but this is something that could drastically affect you in the event of a claim. We're trying to advise you to the best, to make sure you're covered and not stressed out or financially strapped down the road.
And if you know, then you can make an educated decision of, do I want that glass coverage or don't I want that glass coverage?
Right. And it's not unreasonable to hear stories of that front windshield cost $3,500. Right.
I had
Especially with all the electronics. Yeah.
Right.
I had a motorhome windshield break one time. It was like $7,000. That was like 15 years ago.
Wow. Yeah, that's the thing. People don't realize, Becky, to your point, all the electronics that are in the front windshield. That's just an illustration of just how where technology's everywhere on your vehicle, more than you think. And there's all these other things. And to your point, Denny, trying to get the parts for all of these things isn't what it used to be.
Yeah, I mean, parts are expensive. Cost of the body shop is expensive. Building materials are expensive. Labor is expensive in the building trades. So the insurance company has to make up for those things somewhere so that there's money to pay when the claims happen. So,
right. And with the constant price pressure, especially with a lot of the products coming out today, it's kind of like I don't want to say a bait and switch. And again, we're going to do another show on this about different tier products that companies have based on price that didn't exist before. So if you're making decisions on your insurance based on the price, you got to know that these contracts are vastly different than they were, right? We even have some companies that tier products too, and that's what we're going to actually throw some of ours out there just so that people can understand what the differences are. It'll be interesting to see how you choose to buy insurance. I've always felt that you should buy your insurance products based on the claims experience first, because that's what you're buying, right?
Right.
You should be asking questions about how are they on their claims payment. The old lesson that I've always said is if you don't want to read an insurance contract, which nobody wants to do, then you should go back and read all the exclusions. At least read the exclusions and say, are you happy with what you're giving up? Because that has to be stated in the contract by Ohio law, what we're not going to pay for, right? And then the interpretation of how things will happen. I've read them. I get it. I get why people don't. You get through half of the first page and you just go, this isn't for me. This is what I have an agent for, right?
The fancier a policy gets, the more exclusions come on, because that's just the nature of the beast. Property policies are written on 3 different forms: basic, broad, special form. Basic form, broad form are name peril, meaning they list the things that are covered, so it's going to have no exclusions. I probably have some exclusions. And then the special form is everything's covered unless it's specifically excluded. So
how does the average person figure that out, Denny?
They call us.
yeah, I mean, listen,
Exactly.
those are the conversations we want to have.
Yeah.
We
Right.
want to
I know you have them and your team has them.
They happen a lot during rental properties. A lot of times I'll ask potential clients or current clients, hey, I see you have these rental properties. If something were to happen to one of these rental properties, are you going to rebuild or are you going to just buy another one down the street? That significantly tells me which direction to go as far as what form to put it on, what the expectation's going to be at the claim time, and that can help control cost too for the client.
Let me ask you, Becky and Kim, when you're needing to get in the middle of a claim for a client, where maybe there's a disconnect between them, the adjuster, or the body shop, or whatever the claim is, how effective are you in smoothing those things?
I think we do a great job. We have a great relationships with a lot of the adjusters. Again, we just have our set 8 companies, and aside from the one that we're cut out of, we talk to a lot of the same adjusters. So we have their emails, we have their phone numbers, and at the end of the day, the adjusters want to do right and get it taken care of. Nobody wants to drag claims out. So I think we have a good communication with them. We're able to talk with them. And obviously we want to relay everything to our insurer too.
That's key, because I think some people have the perception that, and because some companies are really this way, where they're going to try every way they can to not pay a claim. And we know who those companies are. We see it in the trades. and they're national companies, and they're companies you probably wouldn't expect, but they are. And but we're finding that, and this is where most of the adjusters, they live in our community, right?
They're looking for coverage in a policy. That's their job, is they want to find coverage for somebody. So at least companies we represent anyway. I wouldn't say that any of the adjusters that we deal with are looking to stiff somebody or not pay a claim. It's like their ethical responsibility is to look for coverage and find it if it applies.
Yeah, well, that's kind of why we have the companies we do, because they philosophically align with us, because they know we're judging them on claims too, because that has to do with whether or not we're confident putting more business with them, right? If we know our clients are going to have a good
Or
experience.
keep them around or not.
Yeah, that's right. So, and that's always been the types of companies that we've had. So in cases like this is where one of your pain points with clients when they have a claim is if they get stuck in no man's land, right? This is where you guys are able to intercede with that.
Yeah, absolutely. And we'll even call them, because we know our clients, like, hey, how is the claim going? Are they responding to your calls? Giving you a call back? Do you feel like you're being kept in the loop with where you're at with the claim? We try to involve ourselves too, to make sure everything's smooth.
That's big, and we get a lot of feedback for the work that you guys do. So there's a lot that goes along with just what happens in claim time. It starts with the presumption that I'm completely covered. And that's most people. I mean, that's human nature, right? That's not neither bad nor good. That's expectation, right, that people have.
I would have thought the same thing before insurance. Before I've been, working here, I would have thought the same thing. I'm covered.
Well, it's like insurance companies put limits on certain things and exclusions on certain things, because if they didn't, number one, insurance would cost like gajillion dollars, because they would have to pay for every single thing that could possibly happen. So in order for insurance companies to control costs, they've come up with limits on certain things so that you can choose the limit that you want, or reverse the exclusion on a certain thing so that you can get coverage for something that's important to you, so that costs are reasonable.
Well, guys, believe it or not, we are out of time. Great conversation today. Thanks, guys, for coming in.
Thanks for having us.
You bet. All right, this is Leo DePrilly. This is the Gem Young Wealthcast. We'll be back after this break.
At Gem Young Insurance and Wealth Advisors, we know every financial journey is unique. That's why our team of financial planners, paraplanners, and service professionals work together to provide personalized strategies for a work-optional lifestyle, investments, and risk management. We're here to help you plan for today, protect tomorrow, and enjoy the life you've worked so hard for. Take the first step toward financial confidence. Call Gem Young Insurance and Wealth Advisors at 330-533-6936 to schedule your fit meeting today.
Hey, it's Medicare Jer here from Gem Young Insurance and Wealth Advisors. Medicare can feel confusing, but I'm here to make it simple. With the right Medicare Advantage or supplement plan, you can worry less about unexpected healthcare costs and focus more on enjoying life. Let's make sure you've got the coverage that fits your needs and gives you peace of mind. Call me, Medicare Jer, at Gem Young Insurance and Wealth Advisors today at 330-533-7941 to schedule your appointment, and let's get your plan in place.
By calling this number, you will be speaking to a licensed insurance agent to answer your questions or provide additional information about Medicare Advantage plans, prescription drug plans, or Medicare supplement insurance plans. This is an advertisement for insurance.
At Gem Young Insurance and Wealth Advisors, we make planning for your future simple by offering both insurance and wealth management under one roof. Our team helps protect what matters most while guiding you toward your financial goals, whether it's safeguarding your home, health, business, or planning for a work-optional lifestyle. With everything in one place, you get seamless support, personalized strategies, and peace of mind. Call Gem Young Insurance and Wealth Advisors at 330-533-7941 today to schedule your fit meeting and experience all-in-one protection and planning.
Now, back to the Gem Young Wealthcast, brought to you by Gem Young Insurance and Wealth Advisors. Once again, here's Leo DePrilly.
Welcome back to the Gem Young Wealthcast. This is Leo DePrilly. That was a great show today. I hope you got some more insight on what really happens behind the scenes with a claim. And if you don't already know, this is hopefully a way for you to adjust your expectations or have this conversation with who your insurance agent is. And if it's not somebody that you love, you're always free to call us. But there's a professional side to how claims should be handled. There's a lot of good companies out there. We have a lot of great companies, but we run into a lot of management of expectations when people just drive the price. And we're living in a world where everybody's trying to persuade you to buy their insurance because they're the cheapest date in town. I said this before, that when it's cheap, there's a reason for it, but I'm taking it out of the academic world and putting it into real world situations. That's what this month is going to be, is really going under the hood, showing you how insurance really works, how insurance companies behave, what their expectations are, how they're playing this game, and at the end of the day, how all of this is going to affect you. So we put a lot of time, effort, and resources to make sure that when you have a claim, because like I said during the podcast, when we sell you an auto or a home or a commercial policy, you've bought a promise. You haven't bought performance yet. And that's how I think you should look at your insurance, no matter who you buy it from, that when it comes time to perform, how are they going to perform? One of the ways I've suggested in the past to do this is, if you don't want to understand the insurance company contracts, which nobody wants to, I get that, have your agent walk you through a claim. So imagine a claim in your mind that you think you might have, and have them through the policy walk through exactly how that claim is going to be handled. That will help you in a practical, real-world scenario to understand what's covered and what's not covered. If you don't like the outcome, better to find out now before you buy it. Then you can look at things like endorsements, excuse me, so that you can have the right coverages of what you're looking for. And then hopefully you don't have a claim, but more than likely you're going to, because that's what statistics tell us you're going to, that you can have an outcome that is what you expect. So those are some key points that I want you to take away from it. And this is where you have to be in the driver's seat for what you're buying and make it much beyond what the price is, because that's only going to take you so far. I appreciate you listening this morning. It was a great crowd. I appreciate having Denny, Kim, and Becky with me. This is Leo DePrilly. This is the Gem Young Wealthcast. Until next time.
At Gem Young Insurance and Wealth Advisors, we make planning for your future simple by offering both insurance and wealth management under one roof. Our team helps protect what matters most while guiding you toward your financial goals, whether it's safeguarding your home, health, business, or planning for a work-optional lifestyle. With everything in one place, you get seamless support, personalized strategies, and peace of mind. Call Gem Young Insurance and Wealth Advisors at 330-533-7941 today to schedule your fit meeting and experience all-in-one protection and planning.
At Gem Young Insurance and Wealth Advisors, we know insurance can feel complicated and overwhelming. That's why our team is here to listen, understand your unique situation, and provide solutions that work for you. From home and auto to life, plus a team dedicated just to commercial insurance, we help protect what matters most without the stress. Don't wait until an issue arises. Call Gem Young Insurance and Wealth Advisors at 330-533-7941 to schedule your fit meeting and get the protection you need today.
At Gem Young Insurance and Wealth Advisors, we believe your financial goals deserve more than just a plan. They deserve a team. From planning for a work-optional lifestyle to managing risk and supporting your everyday needs. Our financial planners, paraplanners, and service team work together to build a strategy that truly fits your life. Planning for the future will help you make that confident financial decisions and achieve lasting peace of mind. Call Gem Young Insurance and Wealth Advisors today, 330-533-6936, to schedule your fit meeting and start building your financial future.
Join me every week where we talk anything and everything about your money. Have a topic you want to hear more about? Email Katie, that's Kayti, at gemyoung.com. You can find us on Apple, Spotify, and the iHeartRadio apps. Until next time, this is Leo DePrilly.